Hello and welcome to Bricks Brewing. Bricks Brewing is a Sydney-based brewery that will offer a range of premium beers and ciders designed to cater to the rapidly developing tastes of craft beer drinkers. Today we would like to present an analysis of the Bricks Brewing financial proposition over the next 5 years. Australia has always been a nation that enjoys beer. In recent years, consumer preferences have changed. The Australian beer drinker wants more flavour and variety than the traditional Australian beer market has offered, and as a result the boutique craft beer industry is booming. In nominal terms, the Australian craft beer industry is outperforming the wider beer market in every key financial marker. It is more profitable, provides greater opportunity for export, and crucially, the industry revenue is forecast to increase at an annualised 5.6% through to 2024. This stands in stark contrast to the wider beer industry, which is forecast to grow at just 0.6% over the same period. Given these numbers, the future outlook for the craft beer market looks promising. The Australian craft beer industry is dominated by two major players, Lion with 40.9% market share and CUB with 20.9%. While there are a few organisations like Asahi and Stone & Wood holding a 3 to 4% share, the remainder of the market is highly fragmented and dominated by small independent breweries. Some of the larger commercial brewing operations have recognised this high growth potential in craft beer and have started to acquire some of the larger craft brands. In 2017 and 18, CUB acquired Four Pines and Pirate Life, and Coca-Cola acquired Feral Brewing. However, since these acquisitions, consumers have turned away from these brands and they have exhibited a strong preference for independent producers. Beer imports into China have grown by double digits over the last 5 years, and this is expected to trend upwards over the next 5 years. This is being driven by the younger generation's interest in premium beers. In 2017, annual beer consumption in China reached 45.7 billion litres, making China the largest beer market in the world. Bricks Brewing have identified China as a key export market from year 4 onwards.
Revenue streams consist of the following: taphouse sales of schooners and pints via kegs and some taphouse bottle sales, keg sales to gastropubs, hotels and restaurants in the Sydney market, sales of bottled beer through hotel bottle shops and bottle shop retailers, some gypsy brewing facility rental income, and in the final year, export sales of bottled beer to China through a distributor. Revenue from keg sales grows over the first 3 years and remains steady beyond this point, and is the major revenue stream throughout all of the 5 annual periods. Sales of bottled beer commences in the second quarter of year 2 and provides the revenue growth from year 2 onwards, with export of bottled beer to China providing the revenue growth for the final year. Total revenue increases through hotel customer acquisition for the first 3 years, with major pub groups such as Solotel, Merivale and Oscars accounting for the majority of revenue, with Red Cape coming on board in year 2. From year 2 onwards, the bottled beer sales see bottler and liquor stacks drive revenue growth, with 31GU, the Chinese distributor, providing further growth in year 4.
The cost of sales of a keg of Bricks Brewing staple pale ale is 6% grain, 10% hops and the balance being excise. Grain and to a lesser extent hops will be sourced from Australia, eliminating forex risks. Though they are eligible for a rebate of 60% of this excise, this maxes out at $30,000 and becomes immaterial as the brewery comes up to nominal utilisation. Bricks Brewing will employ staff in 5 roles in the first 5 years. There will be 3 full-time staff, being the manager, head brewer and salesperson. Taproom staff will be hired on a casual basis according to demand once the taproom is in operation, and a brewer's assistant will be employed part-time to assist on days when the brewery is brewing or bottling. Total annualised employment expenses at the end of year 1 are $355,000 a year, rising to $461,000 a year in year 5. Real wage growth for the first 5 years is assumed to be 0. Though employment is one of Bricks Brewing's largest expenses, a real wage growth figure above 0 has only a small impact on the NPV of this business. In year 5, as a percent of revenue, the main operating expenses for Bricks Brewing are employment at 26%, rent at 5%, with sales and marketing, utilities and other operating expenses accounting for 3% of revenue each. Of these, the biggest unknown is rent. The availability of a premises of the correct size and location is both limited and varies widely in price. A cheaper premises might be sought in a more industrial location, but this would likely impact the popularity of the taproom, a key revenue source for Bricks Brewing.
The list shown provides the investments required to establish the Bricks Brewing business. The majority of the CapEx items consist of equipment, fit-out, or construction that has a useful life well beyond the 5-year period used in our analysis. The bulk of the investment occurs in year 0, consisting of brewing equipment, kegs, site works for the brewery, and the fit-out of the tap house. This front-loading of CapEx means there is less discount factor applied, which will affect the net present value negatively. Year 1 sees a few more kegs purchased to meet demand from the pubs. Year 2 sees further keg purchases, but most notably the purchase of the beer bottling machine. There is no CapEx scheduled for year 3 and 4.
This chart shows in white the cumulative cash flows of Bricks Brewing. The green line represents these same cash flows discounted at a 30% discount rate. A maximum cash outlay of $672,000 will be required in the first 4 quarters of operation as equipment is purchased and the plant commissioned. After that point, Bricks Brewing becomes cash flow positive. Company tax is payable first in quarter 11. If the project is delayed by any more than 1 year, the tax rate will fall to 26% before any company tax is payable. In nominal terms, the initial outlay is repaid in the 18th quarter of operation. At no point in the first 5 years of operation does the net present value turn positive. Assuming a 4.7% growth rate and a terminal discount rate of 30%, Bricks Brewing does indeed have a small positive NPV of $114,000.
Bricks Brewing's revenues and NPV are very sensitive to its ability to win customers. Monte Carlo simulation of customer win probabilities show that only in 10% of the cases firm could generate a positive terminal NPV. So it is quite clear that if firm fail to onboard all customers as forecasted, then the firm will suffer significant losses. The base model assumed that each keg is delivered and swapped over fortnightly. However, if turnover of kegs increase by 3 days, then NPV will be reduced by 80% because increase in kegs turnover period will impact supply chain significantly. Bricks Brewing planning to sell kegs at 63% margin. However, if gross margin drops by 8% due to increased cost of goods sold, then 5-year NPV is reduced by 137%. Though Bricks Brewing's 5-year NPV is negative, it is generating positive cash flows from year 1. At 15% terminal discount rate, firm's terminal NPV is $1.3 million. So potentially Bricks Brewing could look at the option of creating a value to shareholders through the sale of a business if a larger brewery is willing to evaluate the firm at 15% terminal discount rate. Bricks Brewing is exposed to number of risks as a startup entering a very competitive market. Key risks are failure to onboard customers, substitutes from competitors, lack of quality control, and volatility of FX rates. It's highly likely that any startup may struggle to secure client contracts as per the forecast. This could significantly impact firm's revenue and NPV. Given the number of alternatives available in the market, substitutes could drive sales down. Maintaining the quality during production as well as during the supply chain is essential to maintain the flavor of a craft beer. Lack of skilled staff or lack of adequate measures during transportation could impact product quality. Finally, volatility of FX rates is expected to happen. Change in FX rates impact upfront cost as well as the revenue generated from exports to China.
Based on the fact that Bricks Brewing provides a negative 5-year NPV at a 30% discount rate and only a marginally positive terminal NPV, assuming all anticipated customers are won, we cannot recommend Bricks Brewing as an investment at this time given Rich Investment Group's current risk appetite and the availability of other higher NPV projects.